Retirement Advisors with the Gradient Investments Weekly Market Update for the week ending May 26, 2023. We hope you all had a wonderful Memorial Day as we honor our fallen heroes and veterans who gave us our freedom. We're so thankful for them. So we've got a short trading week. Let's get into what happened last week. Equities are mixed across the major global indices last week, with the S&P up 0.35, the Russell 2000 down just 0.02, but the NASDAQ was up 2.52%. Now, overseas, the developed markets, which is the EFA, was down 2.27, while the emerging markets was down 0.41%. In the U.S., the best performing sectors were technology and communication services, while staples and materials were the laggards. By style, growth once again outperformed value. We saw value lead the charge last year, but growth has been leading this year, especially with artificial intelligence. Fixed income rates rose and bond values declined, with the 10-year Treasury rising 10 basis points to end the week at 3.8%. President and Speaker of the House announced a provisional debt deal, which would, over the weekend, after weeks of negotiation, a full House of Representative votes is indicated for today. So we're going to see how that goes today. We're supposed to get a vote on it. We'll see what happens there. Let's talk about commodities. Oil prices have continued to retreat from the early May highs, falling 1.9% last week. We were over $2,000 an ounce. Today, the demand for gold in the first quarter of 2023 was down 13% from the same period last year, largely due to investors reducing their purchasing, according to the World Gold Council. An increase in real yields and rising U.S. dollar has also been a headwind for gold prices as of late. So it's always good to have some gold. I like having some gold and silver, whether you have it in a portfolio or personally. We don't deal with that, of course, but it's a great thing to have. We do have a portfolio in gold as well. Let's talk about economic data. Personal consumption expenditures, PCE, which is another indicator for inflation, increased 0.4% month over month in April, as it was 4.4% year over year versus 4.2% in March. The core PCE index, which excludes food and energy, was up 0.4 month over month and was 4.7% year over year versus 4.6% in March. What does that mean? Inflation is still sticky. It's still around. It's supposed to be transitory. It's supposed to go away. It's not going away. In fact, they're probably going to raise rates again next month as a result. So how about the second quarter? The second estimate of U.S. real domestic product, GDP, for the first quarter of 2023 was 1.3 versus the initial estimate of 1.1. Real GDP in Q1 of 2023 was lower than the fourth quarter of 2022, mainly from a slowdown in private inventory investment and non-residential investment. The decline was offset by an increase in consumer spending, residential investment, and an increase in exports. Let's get into some company news. NVIDIA, stock of the year. This Core Select and G33 holding finished the week higher by 24.6% after the company reported strong first quarter results and a positive outlook in the second quarter. The company expects their revenue to grow 53% on a quarter-over-quarter basis, as they are well positioned for the growth of accelerated computing and generative artificial intelligence. You see that happening big time right now. Let's talk about Palo Alto, which is a Core Select and G33 holding, reported their fiscal third quarter 2023 results and updated their full year guidance for higher growth than anticipated. The company expects to deliver revenue growth for the fiscal year 2023 between 25 and 26%, and billings growth between 23 and 24%. The stock was up 12.2% for the week. And that includes this week's market summary. Thank you so much for being part of the ARA family. If you need to get a hold of us, give us a call at 855-756-5700. Visit us at aradvisorsinc.com. Make sure you scan the barcode, the QR code, get the newsletter, share it with your friends. God bless you, and we'll see you again next week.